Hi, Shade with secretsoftaxlieninvesting.com with another video in the series on due diligence with tax liens and the risks associated with tax lien investing. For this video, we're going to talk about bankruptcy. Now, what is the risk of bankruptcy with tax lien investing? When I first started, bankruptcies were actually one of my biggest concerns. It went to reasoning that if people couldn't pay their tax bill, maybe they couldn't pay their other bills, and so bankruptcy would be very common. But that's not really exactly how it worked. Bankruptcy with tax liens is possible. It's something that can happen. When we realized that, we set out trying to figure out, due diligence and what you could do in terms of research to locate potential bankruptcies. But what we found was that it was very time consuming and it wasn't all that effective. So the question was, what was the worst case scenario with a bankruptcy if it occurred? And what we found was this. First off, bankruptcies are pretty rare. A lot of times counties will pull properties from lists if they have bankruptcies applied. But if not, and you were to purchase a lien that had a bankruptcy applied against it, what's the worst thing that could happen? And the exact answer would depend on which state you were investing in. But in some cases, the lien begins or it stops accruing interest when the bankruptcy is filed. So the initial investment is mailed back to the investor plus whatever interest they'd accrued up to that point. But in other states, they may treat it differently. They may have redemption occur over a period of time. So they pay out monthly checks until the balance is paid off, and that may be with or without interest. So the reality of it is the worst case scenario really is that you get your money back. There really isn't a scenario there where you're going to lose your money, and you may even get your money back plus the interest rate return. I say that because Steve and I have actually experienced this. These are a couple of tax lien checks that we received from the county in a case where redemption occurred over a period of time. So over the period of about 18 months, checks were mailed out to Steve, and they actually included the interest rate return, so he still earned the interest rate on it. So if you were to look at that, it's really no different than if the lien had redeemed 18 months after that point. Just in this case, it occurred over that time gradually, so they were sending out checks every month. Did you pay a lot for training that didn't really help you when it came to tax sales? Did you try endlessly to get support or get some kind of hotline questions answered? Well, if you did, you should take a moment to check out secretsoftaxlieninvesting.com, where you can get more free training offers and more downloads. If you're interested in paid training, we have complete training lists and hotline service for just $99 to start, and then $29 per month after that with no contract, so you can cancel or stop anytime. It's the most affordable training available. So if you're interested, take a look. It's at secretsoftaxlieninvesting.com.